Hello and welcome everyone to this weekly market recap for the week ending Wednesday, December 11th, 2024. I'm Tom Bowley, Chief Market Strategist at EarningsBeats.com, and it's a pleasure to be with everyone again this week. The market's been very resilient. We've seen a lot of strength in the S&P 500 and the NASDAQ, a little less in the Dow Jones and the in the IWM, which tracks the Russell 2000. We'll take a look there. Transports have weakened, especially in the railroad area. So we've got some things to talk about there. This is a big week for inflation reports. We had the November CPI report come out earlier this morning. I'm recording this as of Wednesday after the close. And so the Wednesday report came in, that CPI report, it came in as expected. I think the market, saw some benefit in that. We saw a little bit of action to the upside at the open, especially on the S&P and the NASDAQ. And we saw a little bit of participation from small caps throughout the day. And we came back down a little bit into the close. But overall, I'd say it was a pretty decent day. And that was, again, on the heels of what I thought was kind of a ho-hum inflation report. So again, the November headline CPI was expected to rise 0.3%. That's exactly what we saw. And if we strip out food and energy and look at the core CPI, again, it was expected to rise 0.3%. And again, that's exactly what we saw. So no big surprises. I think the market liked that. And as a result, we did pretty well on the session. Now, tomorrow morning, Thursday, we will be getting the November PPI report. Personally, I don't think that's as big of a report for the market as the CPI, because the CPI is what actually gets passed to you and I, the consumer, whereas the PPI is at the producer level. So I always I think it's much more important as to what actually gets passed on to the consumer. So I thought we were pretty good as far as the report went today, and I thought the market continues to be very resilient and continues to trade higher. We saw all-time highs on one big stock, Tesla, TSLA, first time breaking above $415 ever on the stock. It's been 3 years since Tesla had printed an intraday high over 414. That was all the way back on November 4th of 2021. So it's been over 3 years. Today, we actually broke out, closed about $10 above that level. I believe we closed on Tesla around the 424 level. I love these all-time high breakouts, especially after not seeing one for 3 years. That was a big deal for Tesla, and I fully expect that we are going to see some higher prices on Tesla. Could be a very strong year in 2025 for Tesla as we go forward. But let's take a look and go back and look at 1 week results in our major indices, and let's just see what the numbers look like. You can see that the NASDAQ actually moved up by 1.25% over the last week. None of the other 5 indices can we say that. So we've had a really strong move. It's a lot like what we saw in 2023. Where we had the Mag 7 going up and everyone was concerned because nothing else was kind of going up with it. I mean, I went through all the NASDAQ 100 stocks, and there are a lot of NASDAQ 100 stocks that are not performing well. But some of the highest weighted stocks are those Mag 7 stocks. And as a result, when they break out, when Tesla has a really strong move to the upside, or Apple, Microsoft, these are all the stocks that are very heavily weighted in the NASDAQ 100. So when they're on the move, it honestly doesn't matter much about what else is going on in that index, because the NASDAQ 100 is going to follow those leaders. So we saw a lot of that. But as you look to the other indices, I mean, the S&P was flat, or has been flat for the last week, benefiting from those same Mag 7 stocks, by the way. But then once you get past those 2 areas, then you look at the Russell 2000, down 1.25%, mid caps down 1.3%. Transportation, as I mentioned, down 1.9%. Dow Jones about the same. So overall, the majority of the market has just kind of gone maybe into a little sideways or a little bit of profit taking, while we see those Mag 7 stocks moving back up and carrying the market to the upside. The only thing that looks a little different than what we saw in 2023 and earlier in 2024 is that semiconductors are not really participating with this push to the upside. Today, we saw semiconductors outperforming, but for the most part, this has been a group that has been lagging, still trying to break out above the high it set back in June. So you can see that was 6 months ago. Still haven't been able to break out, but things are turning up here in the short term. We'll see if we get that breakout maybe later this week or next week. Moving on to the sectors. So again, looking at the last week, we got the consumer discretionary group rising 4.6%. So think about the big leaders in the XLY. Two stocks make up about 40%, maybe a little bit more than 40% of the XLY. One is Amazon, the other is Tesla. Both of these stocks have broken out or setting new all-time highs, and especially Tesla. Tesla just a month ago was probably $240, $250. Now it's $424. That's a massive move for a company that size in 1 month. But that's the kind of what we're looking at in the market, and that's why we're seeing the NASDAQ 100 perform well. That's why we're seeing consumer discretionary perform well, and that's why the S&P 500 continues to hang up near that 6,100 level. It's a lot of these bigger stocks like Tesla and Amazon that are carrying the load. Communication services over the last week up 1.73%. We've seen a lot of improvement in the internet area. Meta is breaking out, setting new all-time highs, but probably the biggest surprise for me this past week has been Alphabet or Google, where we saw a massive move the last 2 days out of nowhere. That was a stock that had been underperforming its internet peers, and all of a sudden the last couple of days really shot to the upside. We made a breakout to an all-time high today, and as a result, Google helping lead communication services and that internet group higher. Then we got consumer staples. So you can see the consumer stocks hanging in pretty well, which is a pretty good sign about the economy, not just the current economy, but what we might expect as we go forward. So I really like what's going on in the consumer area. Technology held up pretty well. So even though we've got a lot of red, notice consumer discretionary, communication services, and technology, the three really aggressive groups, outperforming. And this is, again, a lot of what we saw throughout 2023 and the first half of 2024. Is it resuming? I don't know. It might be a little early to say that, but I always respect all-time highs. And when you've got stocks like Apple, Meta, Tesla, Google, all these stocks at all-time highs, you could throw in Netflix, Costco. Costco had a pretty big reversal this afternoon, moving back down, but it had gone over $1,000 a share for the first time. So we just got, probably 10, 15, 20 of these stocks that are really pushing to the upside and helping the market. Down the bottom, a lot of the value-oriented, dividend-paying type stocks, defensive stocks, utilities, healthcare, materials, real estate, energy. Those five are in the bottom half of the sector performance over the last week. So mostly aggressive groups leading, defensive lagging. Let's take a look at the major indices on a weekly basis. This goes back 5 years. Here's the Dow Jones. I mean, the PPO's rising with price action holding above that rising 20-day moving average. Configuration here is perfect. I mean, we could certainly pull back maybe another couple percent, and it really wouldn't make that much difference here. We'd actually just go back and test that rising 20-week moving average, which is where we found pretty good support throughout much of 2024. And we move on. Let's take a look at the S&P 500. S&P 500, same thing, moving up. Now we've got the PPO starting to turn back up with it. Price action situated above the 20-week, which is above the 50-week. I mean, it's hard to argue with a secular bull market setting new highs with this configuration. The NASDAQ 100, same kind of thing. Finally, we're getting a little bit movement to the upside in that PPO. But again, if the Mag 7 don't hold, a lot of the other areas of the NASDAQ 100 have not really been performing very well. So let's keep an eye on those leaders. If we get a reversal there, that's when we could see a little bit more selling overall in that major index. IWM, I'll stop after this one. This was the one that broke out above the 235 area. Remember, this was the 234 and change high from November of 2021. Well, we just made that breakout kind of like Tesla. Same kind of a pattern, down, back up. Now we break out. But IWM, I really still continue to favor this going forward. We are going to have another Fed meeting next week. I think as the tension focuses more to these rate cuts, I think that's where we're going to see some rotation back into the small cap area. But obviously more on that next week when we chat. All right, couple things that I really like about the market here. Number one is I love the fact that when the S&P 500 is going up, look at consumer discretionary relative to consumer staples. This is one of my favorite charts or intermarket relationships that I like to follow. When this relationship is going up, that is incredibly bullish for stocks overall. Because what this is telling us is that Wall Street has an appetite for companies that sell us things that we want as opposed to things that we need. The things that we need, we're always going to buy those things. And so when that, when the discretionary stocks underperform and we see this ratio going down, that's when we have to be a little bit more cautious about the market. But when we see this going up, and I've got the correlation down here, and this is just for the last year, but you can see we spend much more time in this plus 0.5 correlation to plus 1 area than we do to the minus on the other end of the spectrum. And I could, bring this, I'll bring up this chart. Let me go back further. I mean, we could go back, let's go back 15 years. And we pull up the chart and we'll see prices going up. And you can see from left to right, XLY, XLP ratio going up. Look at the huge move in the XLY, XLP. Look at the huge move in the S&P 500, one of the strongest 22-month periods in our history. We hadn't seen a 22-month period that strong since Great Depression back in the 1930s. That was the last time we saw that kind of a move. And look at discretionary, absolutely crushing staples during that period. Look at when we had the big move from 2016 to 2018, and look at what happened. Consumer discretionary. Now look what's going on. And you see this move to the upside. When you go all the way back, this is back 15 years. Look at all of these positive correlation readings up at 1 or near 1 from, say, a half up to 1. And then look at the ones that are down here below minus 0.50. Very, very few. In other words, the direction of the S&P 500 is highly positively correlated to the direction of this XLY XLP ratio, which is why I follow it so closely. And when I see this ratio going straight up like this, it's going to be hard to get me off of my bullish stance. Next, same kind of a thing here, S&P 500 over the last year. Now you can see this is the large cap growth versus large cap value. Big move from back in May through July was coincided with growth, just crushing value. Look at what's happening right now. Growth to start December, growth is crushing value. And as a result, we're seeing another push to the upside. But it's those mega cap Mag 7 stocks that are really driving the NASDAQ in particular, S&P a little bit. And then you can see so far in December, some of the other areas, the small caps, the transports, they've pulled back because right now that's the rotation away from those areas and into large cap growth. I think that changes again next week. We'll see. I'll be back on here next week to talk about it, I'm sure. All right, I want to point out the relative rotation graph. This is something that was created by Julius de Kempenaar, who's a senior technical analyst at Stockcharts, a good friend of mine. He's going to be joining me for an event actually this Saturday. I'll talk about in a couple minutes. But he created this to kind of show us the rotation that's taking place around a benchmark. Now, we use the benchmark of the S&P 500 for the sectors. And you can see, I mean, this has just been a lot moving to the left, down and to the left, and very little moving up as we look at this on a daily chart. Here's the discretionary. Remember, we just had this huge week last week in discretionary. So this is how you can visualize it on the on the RRG chart. So there's your XLY. If I scroll down a little bit here, I can look at other areas. So I'll pull up like technology. And so you can see that technology is making its way into the leading quadrant. It's improving, but it's not far from the center line. So it doesn't have a lot of momentum and it doesn't have a lot of relative strength, but it's improving in both areas. And so I think that's something to continue watching, but it's not off the charts to the upside. Again, XLY looks much better. I think even XLC, we get rid of this and show communication services right here. It was coming out of leading, going into weakening, and now it's rolling back up toward leading. that's a much more bullish configuration. But all three of those are the three areas of the market that are doing really well. Now that's looking at this 1 year daily. Now I'm going to change this to weekly, save changes. And now this is giving you a bigger perspective of what's going on. So this is for the last 5 weeks ending December 11th, as opposed to the last 5 days. So here, look at the strength over the last 5 weeks with the XLF, or excuse me, XLY, then the XLF, then the XLC. XLI is starting to weaken a little bit, but still up in this leading quadrant. XLK is kind of making a little bit of move, but it's not nearly as clear, in my opinion, the strength on the weekly chart as it's starting to show on the daily. We were actually rolling over and heading toward lagging until this last week. And now the XLK is starting to turn back up. So will this really start to build steam, and will we see this long tail start with the XLK moving, really back, solidly into the leading quadrant? Don't know. The ones to me that have the strongest long-term prospects right now are the ones on the weekly chart that are in green in that leading area. Consumer discretionary, financials, communication services, and industrials. Technology, again, short-term, yes, we're getting that strength, getting some breakouts in some key areas and some key stocks, but will we continue? I think part of it is we've got to get those semiconductors going again. All right, so the event I was talking about, we've got a key rotation event into 2025. If you go to our website at earningsbeats.com, you'll see this link here. You just click on it. It will provide you an area to sign up. Our seats are limited. This is a free event, by the way. Focus right up here, free webinar. Again, all it takes, name, email address, register, you're good to go. We will make sure we get you room instructions for Saturday morning. It starts at 10 a.m. The entire event will, and 10 a.m. Eastern, by the way, but the entire event, the entire webinar will be recorded. So if you register, even if you can't make it, we will send you a copy of the recording. So that's why it's really important to register, even if you can't be there. Make sure you sign up for this, name, email address, hit that register now. You can go down below and you can check out what we're going to be talking about and how this thing's going to set up, things you're going to learn. But I think you'll find it really fascinating and educational. And I think the timing of it's perfect with all the rotation that's been taking place over the last few months, moving towards small caps and so forth. And now what we see, short-term moving back toward the aggressive sectors. Julius and I are going to break that down for everyone on Saturday. So hopefully you can make it. On your screen now, if you're on your mobile device, we have a slide up with a QR code. Simply scan your phone on that QR code. That'll take you to the landing page where you can sign up on your mobile device. All right, I wanted to talk a little bit here about Adobe. Just a couple more minutes, go through a few more charts for you. But Adobe after hours reporting earnings, you can see not a good reaction this afternoon, down $48, almost 9% in after hour action. I'll pull this up again just to get you the most recent, still right around the same, close to 9% down. And when you look at the chart, I actually had a chart of Adobe I wanted to show you here, because when you look at the relative strength, this is Adobe relative to software. That's its peer group. So relative to software over the last 12 months. Check that out. We've been down over the last month right at a 52-week low. In other words, this stock relative to all of its software peers has been underperforming for the most part all of 2024. We had about a 2.5-month stretch here in the middle where we saw some relative strength, which was right in through here. But since then, software has been doing well. Adobe can't even get through the highs it saw back in September, let alone the highs we saw all the way back in February. So coming into the report, I would not have really been a fan of Adobe. I wouldn't have expected a whole lot in their earnings report. Why else would Wall Street be shunning the stock? And that's what it's telling me when I see relative strength like that. So anyway, overall, I think that this is a chart that was kind of telling us there could be problems. And now we get the report and we see the market reaction. Not good there. I want to focus on the Mag 7. Let's take a look at the daily chart of the Mag 7 because this is where the strength is. This is where it's been for most of December. Here's Apple. So you look at Apple, sideways consolidation. It broke out to open December and continues to move higher. Then we've got Microsoft. Microsoft had a double top around 440. Early in December, we broke above that 440 level. Another solid day today, gaining more than 1/4%. And it looks like it's in breakout mode, short-term breakout mode, to go up and test the high that we saw back in July. Then we've got NVIDIA. NVIDIA, this is one of the best. If we scroll down here, you can see NVIDIA relative to semiconductors on fire still. I mean, you look at the stock and you say it's not on fire, it's going nowhere. Well, relative to the semiconductor group, which has been struggling, this remains a leader. So I like what's going on in the NVIDIA chart. I don't think it's ready to take off just yet because the group itself isn't strong. But, I think NVIDIA will probably have another very solid year in 2025 looking at this chart. Meta got the big breakout there. Here's your AD line, which is strengthening. Relative strength was at its peak back in early October. It pulled back. We've seen some up and down since then. But even with this push in December to the upside, AD line's gone up, relative strength's gone down. And the reason it's gone down is because internet as a group has been flying. So Meta's going along for the ride, but it's not leading this move to the upside. More of the leader would be Netflix. Google the last couple of days has shown tremendous leadership. But from a longer term perspective, I think Meta still looks really good. Here is Google or Alphabet. There was the 2 days I was talking about. There's the breakout above that July high. AD line really has strengthened these last couple of days. And you can see the downtrend in the relative strength literally ended about 2 or 3 days ago. That's when we started moving up with Alphabet to the upside, breaking out, and now we see relative strength picking up further. I think with this breakout, if you look at the relative strength, the weakness that started began when? Back in the middle part of July. That's when we reached the top and went through a period of consolidation. Now that we've made another breakout, I fully expect that we're going to see relative strength start to pick back up again. Amazon broke above 200 to start November. That was to an all-time high. We went back down, tested support, and look at what's happening in December. Big move up on Amazon, breaking to new all-time highs again. And then finally, Tesla. Don't really know what to say. This is where I was talking about, was it 240 a couple months ago or less than 2 months ago? Actually, right at the beginning of November, it was sitting at about 240, right on the 20-day moving average. And then, boom, huge move to the upside. That's $180. That's 75% on Tesla in 1 month. Crazy move there. But I love Tesla. I think Tesla goes a lot higher. I wouldn't be surprised to see a 5 handle on Tesla not too far in the distant future, especially seeing how it did make that breakout today. All right, I think that's about it. I did want to pull up one other stock. Want to show you something that I would look for maybe. A lot of folks wondering, okay, when do you sell a stock? Here's a stock, Booking Holdings, and I would be really nervous holding this stock right now. Not for the long term, just for the short term. So if you're a swing trader and you kind of want to take profits on a stock, maybe wait, see if you can get a pullback. I'd be looking at a stock like Booking Holdings because we've had this move up. The PPO has continued rising all the way through the highs in November. But on this latest push to the upside, as we keep trying to go higher, you can see that PPO has rolled over. And the volume itself, we haven't had a day over 250,000 shares in December. Whereas when we made the breakout, we were trading 500,000 shares. And we had multiple days over 250,000. So I'm seeing slowing momentum in terms of the PPO, and I'm also seeing slowing momentum in terms of the volume right here. So if Booking were to go up, say, to 5,350, 5,400 intraday, and then make a reversal, and you see that volume spike with a negative divergence in play, I think that's when you could run into some problems with Booking. We could even see a possible 50-day test. That's down under 4,800. So if we get up to 5,350, 5,400, I wouldn't be surprised to see maybe a 10% correction on a stock like Booking with some of the signals. I mean, relative strength is great. Don't get me wrong. The overall group, travel and tourism, starting to roll over a little bit. So just watch out for something that might appear to be a reversing candle. Anyhow, got another slide up on your screen now. You can use that QR code with your mobile device if you'd like to check out how you can follow us at earningsbeats.com. Write a lot of articles over at Stockcharts. We do a lot of videos and so forth. Of course, you can always come over to our website at earningsbeats.com. All right. Like I said, tomorrow morning, we're going to get another inflation report, the PPI, which I'm not as concerned about, but still, I think any kind of a spike would certainly maybe spook the market a little bit, especially the growth stocks that have taken off here in December. So that's something maybe to watch for. Next week is options expiration. That would be another thing to keep on your radar. But beyond the 15th, and especially beyond the 20th, which is next Friday, that's when we tend to see the most bullish period of December. So I expect another strong rally coming into the year end, and I think we're going to see it in the form of small caps. But again, we'll see if that takes place next week. Anyway, have a great day, everybody. If you like the video, be sure to like it, subscribe to the Stock Charts channel. I'm sure they would certainly appreciate that. And I'll be back with you next Thursday. Happy trading.